Trading was surprisingly tradable in the last 24 hours. Quiet on the surface, but with clean reactions at obvious shelves. Bitcoin held near the 111K handle, while Ether hovered around 4.4K, a posture that invites planning over panic. The market's temperature sat close to neutral, with the fear and greed index reading near the 50 line. No euphoria, no despair, just space to let the chart speak. Here's the map in a minute. We've got three currents that matter today: the afterglow of Ripple's legal outcome and the role its community played in shaping it, a fresh signal that private companies are quietly routing profits into Bitcoin treasuries, and a leadership move at Binance aimed squarely at Asia-Pacific, one of crypto's strongest liquidity engines. Together, they point to fewer potholes in legal narrative, a steady spot bid on a schedule, and regional pipes that could carry more volume with fewer hiccups. That doesn't hand you direction, it hands you conditions. Trade those. First, the court story with a human fingerprint. As reported today, a prominent crypto attorney and a Ripple executive credit organized XRP holders, the XRP army, with surfacing evidence, filing affidavits, and giving the court visibility that helped the judge's nuanced conclusion. XRP itself isn't a security when traded on exchanges, even though certain institutional sales violated securities laws. Appeals are now dropped, the case closed, and the dust settling. The takeaway isn't victory laps, it's that legal ambiguity eased at the edges, and that changes how liquidity behaves around headlines. Practically, you'll see fewer is it or isn't it jolts and more respect for clean levels. If you trade XRP, your survival frame is simple. Buy, reclaim, and hold on rising participation, stand aside on failed retests, and don't let a headline rewrite your stop. Second, corporate flow you won't see on a billboard. A new report highlights private firms cycling a meaningful slice of profits into Bitcoin treasuries. One data point cited a 22% recycle rate for a cohort, using a Treasury playbook that turns BTC into a quiet sink. Treat the number as directional, not universal. Treat the behavior as real. Treasury allocation doesn't guarantee up only, but it nudges microstructure. Steady spot demand near month and quarter ends, more stubborn bids at well-known shelves, and reflexive strength on honest reclaims. Actionably, mark your levels, then layer the calendar. If we approach an allocation window while price holds a value area on rising participation, I'll give continuation setups the benefit of the doubt with small size and tight invalidation. If flows are due, but the level can't hold, that divergence is my caution flag. Your edge is rhythm, not clairvoyance. Third, pipes in the East. Binance just appointed a new APAC head, a leadership move, not a candle, but it matters because APAC hours often tug the tape. Korea, Japan, Hong Kong, and Southeast Asia each add their own currents. When platform posture improves in region, price can trade truer in those windows. Deeper books, cleaner spreads, fewer random air pockets. For day traders, timing becomes as important as direction. If APAC liquidity thickens on majors, your best setups might migrate by a few hours. If spreads get quirky during local catalysts, skip the show and trade where depth is honest. Liquidity over lore, every time. Thread these together and you get a week that rewards patient plans. Less legal static, a quiet corporate bid on a schedule, and regional pipes that might carry more volume. Not a call to swing harder, an invitation to set conditions that let the market pick you. If your watch list starts from real catalysts, if your levels are drawn before the bell, and if your risk is sized to the range, you don't need to guess. You wait for the room to breathe your way and step in with a stop that existed before your entry. Educational only, not financial advice. Now this is what I'm watching this week. On XRP, one reclaim, one shelf. If we retake your marked level on rising participation, take a small, defined shot and pay yourself into nearby liquidity. If the retest fails, step aside and let the next pocket form. For Bitcoin, align with likely treasury windows. If we hold a value area into those dates and the order book firms, continuation setups get a shot, with size cut to reflect realized volatility and a time stop to end indecision. Around APAC, test the water. If majors trade cleaner in your platform's depth during those hours, consider sliding your execution earlier. If not, keep your core window and skip the busy session. Skipping is a position. It pays. Quiet habits that keep accounts intact when the feed speeds up. Two-source rule before acting on any single headline. Trade the retest, not the first impulse. The second touch is where emotion yields to information. Size by realized volatility so your dollar risk stays constant as ranges expand. Set time stops so pretty ideas that go nowhere don't rent space in your head. Keep platform redundancy, small funds on a backup venue, because the platform you can't use is the one that hurts you most. Let's land on a conditional tradable read for BTC and ETH. Simple, if then, no heroics. If BTC defends the most recent value area and reclaims your line on rising participation, volume firm, spreads honest, funding sane, my plan is to buy the retest of that reclaimed level with invalidation just below, partials into nearby liquidity, and a trail tucked under structure. If we lose that area on strong participation and can't retake it on the second try, I step aside and let the sweep finish, no knife catching. For ETH, if BTC is steady and ETH prints its own reclaim, ideally with L2 activity firming, I'll run the same playbook but quicker to pay partials, because ETH ranges expand faster. If ETH fakes the reclaim and slips back under on rising activity, I stand down and expect chop until a cleaner invite appears. Either path is tradable if your stop exists before your entry. Before we close, a quick reset of why this matters. Ripple's case reduced legal static on one front, private treasuries add quiet spot demand on a schedule, and APAC leadership at a top venue could firm books in a crucial window. None of these force direction, they change how cleanly price reacts at levels. That's our game. Clarity over rush, rules over vibes, plans over promises.